Good morning. Okay. So we got these 1, 2, 3 patterns everywhere. Right? What's a 1, 2, 3 pattern? Well, it's an igniting bar, a wide range bar. And they can happen at the beginning of a move, in the middle of the move, as a continuation pattern, which could be the middle of the move if they continue. They don't happen at the end of the move, meaning, well, rarely, I shouldn't say never, something like what looks like the Dow. But it's a wide range bar, a range expansion bar. And this one happened after a few days of consolidation. Clearly, yesterday was an inside bar at the top of the range. It stopped pretty much exactly where we anticipated it would yesterday and did a lot of nothing, running in place as we wait for the Fed day. And so now we'll see, do these continuation patterns, 1, 2, 3 patterns follow through? And at that point, you can say, well, do I want to take this 1, 2, 3 continuation pattern ahead of this news? It's not a right or wrong. It's a personal choice. And I would say sometimes you look like a hero. Sometimes you look like an ass for trading in front of the news. And, you just don't know. Right? We know they're going to come out with some interest rate hike. Is it going to be a little less? Is it going to be the same? Are they going to do nothing? We'll find out tomorrow. Anyway, you can see this on the 15-minute chart. The wide range bar, the up day, created the void. It came down to support yesterday and just jiggled around all day inside bar at the top of the range. I don't know if that's a real bar. I guess when I look at the cues, I'll tell. There was some news there at 8 o'clock that caused that whip down and back up again. But things are up here a little bit. And actually, if the market was open, not pre-market, because we don't take these pre-market, that 1, 2, 3 continuation pattern would be triggering, right? And so yesterday's high is the first, yesterday's high is the first reference point of support, but we got the 1, 2, 3 pattern, and the trigger is above the inside bar, not the wide range bar. Some people wanted to take out the wide range bar. So the next line of resistance, okay, I'm having a little trouble here. Intraday, if we looked at it intraday, would be around here, right? Like 495-ish. You can see that pivot right there. These overlapping bars, these bars right there. There's this little consolidation, which isn't very much. So as an intraday trader, if it was to run from here up to there, which would be substantial, for intraday, during the day, I would expect that to stall there. But if it gets through this area, you would think, hey, it should be able to tag 400, which is just a whole number. But, we shall see. I just want to see if the cues have that same jiggle there. That looks like something weird happened, like bad ticks there. In any event, it's gapping above the high there. So we're getting some continuation, and you can see my cursor on the hourly chart, it's just gapping right into this overhead resistance. You can see the pivots right there and where that's at. So that's gapping up into resistance. Futures. So there's the 1, 2, 3, and that congestion is up there. Can it get through it? I can tell you, just the gamma ray gun, so to speak, whatever we tend to call it, that McGraw calls it, that 3950 area, which McGraw, look at that, overlapping opens and closes right there. Tell me that these option traders aren't, closet technicians, right? With this option trade. I know it's the half number, the whole number, blah, blah, blah. But just look how it lines up perfectly right there with these overlapping bars. Yeah, of course they are. They're all they're talking about Greeks and Thea and Delta and Vega. And then behind the closet, they said, hey, did you see those guys jump on that Thea thing? We're using the charts in the closet. Anyway, I know they use all that stuff, but you know, you can make it complicated. There, we try and simplify things at Master Trader, everything. So we look at, some of the what McGraw looks like, and some of, the other more esoteric toward the options activity, open interest, and not Vienna, not Vienna, Varna, and all this kind of stuff. But anyway, you can look to the left and you can see where these things line up, and so that is the reference point as far as option activity goes in the SPX. So 3950 SPX right here. You got 3950 with this cluster there, and kind of leads, anything above that should be doable as a call, as a bear call spread. And how far away can you get? Wow. 3975. That would be like insane to happen today in front of the Fed meeting next week. So it might get to 3950 and then back off if this triggers, and then it hits that area, and so 39. And if it does pop up, look, so if this is going to trigger at the open, let's say this, and it's heading up to 3950, there's this balancing act. It's like, do I do it at the open? Or if things are popping at the open, do I wait? So there's the time decay, so, if for a half hour it runs up at 10 o'clock and it's at 3950, you could probably do close to a 4,000 bear call spread for the same money. And you might say, well, that 3970, that thing is pumped up right now. I think I want to do that. Well, you can do it. That's a choice. But you go higher, it's more of what we call the no-brainer money. Little less money, but I'll kind of use the word guaranteed money with a disclaimer. Let's put it that way. So if it runs up, premium pops, some time decay, but in the morning it doesn't have too much of an effect, but you get far enough away and it'll all be good. Right? Down below, 3,800 or less, which I don't think there's going to be any juice down there. Hell no. 3835-ish. 3835-ish. I don't think so. Let it trigger on the that 1, 2, 3 and up above 3950. I believe that would be good. Qs doing not much of anything, but maybe it goes up a little bit, brings up the rear. And so the Dow, that's the one I said, here's a 1, 2, 3. It's a low probability trade, because it ran up. Getting 1, 2, 3s where it just starts the move is the high probability trade. After they run up and you get a wide range bar, they could go higher, but that's the lower probability trade. Ideally, with indices, you have similar patterns, not like this where the Dow is run up and the S&P is kind of like meandered halfway up and the Qs are not even there. So big difference in markets. And so this is kind of the 1, 2, 3, and it's not exactly textbook because yesterday was a higher high, it was stronger, but maybe it gets up here. Let's see if things can continue moving. The 200 MA is there, but there's nothing to the left. It's that wide range bar, and that's why moving averages are subjective. And what's Bitcoin doing? We had that continuation pattern yesterday. It did not continue, but if you took this trade, as soon as it took out the high, you see that resistance there, you're not stopped out because your stop's got to be under that bar. And so maybe it gets another jiggling around, again, Fed day news, so on and so forth, and then maybe it eventually takes off. The dollar was up yesterday, held the market after the initial move to do nothing. Now it's gapping down, so markets are up a little bit. It's just in the middle of this range here, so nothing to take away from that. So dollar down, right? You see silver up, having a little pop there. The dollar stays down. This should continue to pop, right? It's in a trading range, so in the short term, the pop could be sizable, but keep it in perspective. And I guess the big question is, will the dollar, just going back down to it, gold up a little bit, dollar down, but will the dollar break down below here? So that's really kind of like the bigger picture of what's going on right now. We're talking about these day-to-day movements, but you've got this dollar in a trading range here. It's just consolidating within an uptrend. But, as the Fed does what it's going to do today, and there's speculation, that maybe this might be the last raise for a little while, maybe they'll pause, whatever. So if the dollar breaks down below here, that could get the markets moving up. If the dollar goes up to the top of the range, odds are the market's going to go down. It's just what's been going on. So, nothing fancy, but it's just following the trends at the moment. All right. You can see the 13-week, it's moving up. It's above 4% now. It's kind of saying, market's telling the Fed, this is what we want. We're going to drag you there, yelling and screaming, but that's what you're going to do. They're going to push it up 4%, wherever they're going to go. But as long as this is going up, the market believes that this is what the Fed is going to do. And it's interesting that this is up and the dollar is down. So there's that break from that connection, one and the other. So that's interesting. 5-year gapping down a little bit. Remember, we talked about this little buy setup here, which triggered, and now this is gapping down. So there's a lot of uncertainty, of course, about what's happening. And do your day trade, stand aside, or swings with larger stops, and we'll see how it unfolds. 10-year moving down. Next support is right here. So, and we looked at Bitcoin, dollar, oil is up a little bit. Just kind of whipping around. Yesterday I spoke about this little messy buy setup. The fact that this was moving down and then it rallied back up above the high. Expectation is there'll be buyers on a pullback, and it was a crazy whip back and forth with the tails on the top and the bottom, and it's trying to resolve itself on the upside. A lot of misalignment in different places. And SMI, Alex is telling me it's coming. Right. SMI at 10 o'clock, PMI 9:45. So news coming there that could move the markets. And maybe you better be nimble, wide stops, or do nothing. This is starting to inch up. Right. We've been talking about this sentiment. It's just been hanging here, doing nothing for a long time while the markets are going higher. And, the day-to-day put call ratios, the equity one a little lower. This moving average is based on the total put call ratio. So looking at this, the takeaway is, hey, if this 1, 2, 3 triggers and the markets can move up, I think SPX catches up with the Dow, and tech moves up to a different degree since it's lagging. Option traders come in and buy some calls. This pushes up where we have alignment. Right? So based on these two market internal gauges, what we look for is when they're aligned, not just one is there, because historically when one is there and not the other, it's a low probability. So we look for alignment there like there was here. Now that doesn't suggest a decline like we saw from August into October. But what it tells us, that risk for longs is increasing, and that's it. And then we see what unfolds from there. Risk for longs increasing could result in a sideways consolidation. That's a correction too, what's called a time correction. Or, it could run up here and boom, right back down. So that's the unknown. That's what we assess by what we do every day and every morning here, right? We look at the charts, we look at what's aligned, what isn't aligned, we look at the market internals, we look at intermarket analysis, what's going on between all of this, between each other, and try and figure out what's going to happen. So right now, we've got the uncertainty of news. We've got markets that are out of sync as far as how they're moving, Dow moving up, this doing nothing, Q's kind of hanging there. We've got, open interest levels that are to be bumped overhead and can make for some erratic, choppy price action. So there you have it. Trade accordingly. Credit spreads have been doing pretty decent. Well, I don't think Dan can mention that. I don't think any of them have bitten hard lately, Dan, but that I can remember, because I didn't hear too much crying lately. But maybe you can talk about that a little bit. And that's it for me.
No, you missed the results. Last weekend's letter, we said we're 23 for 23 in 2 weeks. So there's no crying.
You did mention that to me. I did forget the 100% batting average there, but sometimes it's 22 for 23, and 23 was one that bit your ear off. But no, it's been good that this market's been so choppy like that, and the credit spreads have been 100%, which is 100. That is like awesome. What better can you do? Nothing.
And tomorrow we're going to be doing MT live on selling options and the earnings, and I counted them this morning. Now we're 20 for 20, including Sony right here. This was the only one we did yesterday. Beautiful bottoming pattern. I shorted the, what was it, 61s. Where are you? Well, yeah, the 61s naked. And this, I wish I gave it to both letters. I mean, that's a beautiful bottoming pattern, daily, weekly, with a big void. If it weren't gapping up so much, I would watch this as a long. Oh wow, Logan, thanks for that. There was a couple. I wish I had an assistant, because then as I go through all these earnings, I would just give you the numbers that I'd be willing to do. It's like, and we just go through them like gang fire. But car, I was so tempted to do the 310s yesterday. It was like $1.25, I think. And then even if I don't do it, just write it down. This is what was in my head. And then we'll have a different column of, but where did the gap, what did the premiums do, so on and so forth. But we're in plenty of them as it is. But this is one, so you can see the list I just gave, that it's still on my list. Now it gave up the pre-market, so I like it even better. So I'm going to put that in this window. The CTLT, this was a day trade short we mentioned yesterday, had earnings today, bearish. Look at that bearish daily. It's getting killed on earnings. Fernando just asked me about how to manage it. It's up to you. I don't know where buyers are going to step in, but my canned answer is half. I'm assuming you're short. You didn't tell me what you had. Half 30-minute high, half 5-minute high. You book a monster gain, and you're willing to let it retrace a little bit, and the hopes of getting a bigger gain. This is not earnings, but I saw it up. Been lagging, but maybe it's the start of something. Airbnb was one. We were talking about doing a condor. We were looking at like selling the 123s and something under 100, and there wasn't enough juice, but that was a beautiful condor setup. And gap into 111, you would have a huge gain at the open with volatility contraction. Rocket Mortgage, I just saw him. There was an article in the Wall Street Journal about him getting beat up with interest rates rising, the financing company. But there's a bottoming pattern that's worth watching. This was also in the journal. This is Livewire. It's Harley Davidson's SPAC spinoff of electric motorcycles. And it was saying it's, not doing so hot. And I probably could have told you that. Most Harley drivers I know, they like the sound of their motorcycle. And now you're taking it away and making it electric. They're like, no, I think I'll go back to the noise. Some news in China, about lightening the restrictions, COVID, etc. So these stocks are popping. So KWeb, you got the usual suspects. It's high risk trading Chinese stocks. It's just, you got gap risk, but this one's the most beat up. So let's watch this 30-minute high, Baidu. Uber had positive earnings, so I always look at the cousin. This is a better trade for a new setup, Lyft. So I got that bottom right. Let's watch that 30-minute high or pullback. This Lulu and Cream, we had in the weekend letters, put spreads, and I said hold off yesterday because the market was so wacky. But it closed strong, and I said all these 1, 2, 3s look fantastic as continuations for today. And so the only problem is the big gap up. I mean, they would have been no-brainers if we opened flat or up a little bit and then cleanly traded through them. Nicola here, I just noticed I missed this yesterday. But that's a wide range igniting. That could be the start of something. But we had 3 1, 2, 3s in our weekly options trader that they're triggering here because of the gap up. SMH is a put spread I like. We even had Q's put spread, been lagging. And spiders look the best. That is a 1, 2, 3 continuation pattern. But the gap's messing it up. But I did send out an alert saying if you can still get filled on the put spread, go for it because it's only going to get filled on a pullback. Fox, 20 gap in the top of the range. I don't know. It could be the start of a bottom, but I don't have paper. Whoa, Zebra getting whacked. 260. This was when I was looking for a put spread. I think I was looking at the 250s, but it's too spready. We'll come back to you. Fox A is going to be the same. Insight. Wow. When you see horizontal dots, that's almost looks like a buyout, but that can't be right. And James, Lily, somebody announced a buyout. And what made it harder selling puts yesterday also was a lot of things have run like this. So we were into earnings. So we were actually looking at a number of call spreads yesterday, but the juice wasn't adequate for me. There's no puts, no prints pre-market, but I'd be interested in the 270 puts if it doesn't have a fair gap down here. CMP no pattern. This one's I was looking to sell the 110 calls. I see one print up here. I'll put that in a 5-minute window. So that's the type of pattern when XYL, when it rallies straight like that into earnings. I don't care if it opens up flat or down a little bit. 30-minute low. I'm not saying I do it blindfolded, but my bias, shorter call spread, 30-minute low. Because then whatever the news was, it's cooked into it. Yeah, Ty, I only see one print there, but yeah, that's a big 1, 2, 3. I think I said yesterday, maybe day trade. Holding things into the Fed meeting has big risk, of course, but more so with interest rate sensitive things for obvious reasons. All right, IT, I was trying to sell puts yesterday, but Greg, this is the one we were trying to sell the 250s. But it was spreading. So I'm going to put that in a window. That looks great. WEC, I don't see any prints, but put spread idea. This is AME, another one. I was looking to sell call spread. I'll put that in a window. I can't see where it's opening. Similar to the other one. IDXX. We'll come back to you, but it's kind of a mess, but more put spread oriented. That's a mess. You're gone. Any one of Sam, I think, was talking about selling a $40 put. So yeah, that would have worked beautifully. I was looking for a condor too, but not enough juice. SPG, that's a churning strong uptrend. So this is not one that I like to fade. This to me looks like it's going to grind its way up here to the 200, but there's not my setup. Yeah, the oil's up again here. Biden came out trashing again, oil companies. KKR, no pattern. Okay, so here's the SYY. Here's another call spread one. I was looking to sell out of the money call spread yesterday. Now it's gapping down. That looks good. I'm running out of windows. SYY. ACL, we'll come back to you. PSX. Yeah, these oils are just grinding uptrends. They're very strong, but it's just not my setup. I don't see any prints. TRI. EPD's a mess. You're gone. Thomas Alpha India. Alpha India. It looks like, there's differences between bullish bottoms, like Sony, and this just consolidating like a dog. This still looks like a dog to me. Compare it to this. You have something bars. You got definitive lines of bullishness. You see the difference there? All right, Uber. Okay, earlier, yeah, it was gapping right here, and I was thinking 30-minute high, but it's still grinding here higher. I still like Lyft better as a new trade. MPC, no pattern. Another oil. There's our Sony we talked about. Another oil. I'm just not messing with them. I mean, they're bullish. I mean, look, they're bullish, but I mean, we nailed it. I did the trade review of the week. You'll see coming out tomorrow. We nailed it here, and that was the time to do it. Now it's the second go around continuation pattern. All right, Lilly, was this the one that was buying a company? Gapping down, no pattern. Pfizer. Pfizer looks like it'll probably grind to the 200, but I'm not chasing. HLIT was gapping down, 30-minute low as a day trade short idea plus call spread idea. This is it's a bear 1, 2, 3. All right, I got alarms going off here. So it does gap it over yesterday's bar. XRT is gapping. We're long this, and so that's good. AGNC you can buy in a pullback. This gapped over the entry.